Tesla, Facebook, and earnings mayhem, all up today on this episode of Young Money Investments. If you know me and you know this channel and have been a part of this channel for a while, you know that these are two companies that I have loved talking about, investing in, and talking about all the financials. In today's video, we're going to jump into both of their earnings reports and we are going to go through it step by step and see what this means for the proper analysis and future of both of these companies. All right, guys, so we are going to jump into the nitty gritty portion of no other company besides Facebook. Facebook is a company that I have talked about heavily in this channel that has probably been my largest long-term investment that I have been in as of recent. It's a company that I have been talking about for a while. They have been hammered over news probably for ever since their July earnings when they dropped about 20%. On the day. It was a crazy day, and as the economy had continued to go down, we had seen Facebook just get pummeled. I believe it took a loss from all the way up at highs of 219 all the way down to about 121 or somewhere in that range. I don't remember exactly, but coming up today, we actually saw a 16% increase on Tesla. That is something that is just not Tesla, on Facebook. Just something that's crazy. It's just crazy to see, and we're going to talk about some of the reasons that it actually grew. So one of the reasons that we had saw Facebook grow so substantially recently on earnings was because the user growth was much better than expected for the daily active users here in North America and Canada. It's United States, Canada, as well as the monthly active users increased from 2.6 billion people annually or monthly to 2.7 billion. So it is growing substantially. If you can take a look here on the screen, you're going to see that the monthly active users were up. And it also says that, but while Facebook's total user counts were largely as expected, the company, amid worries about declining usage in these markets for its core app, outperformed the daily active user expectations in North America and Europe, which respectively accounted for 50% and 25% of its Q4 revenue. North American DAUs rose by 1 million sequentially to 186 million, topping consensus by 1 million. European daily active users, which fell in mid-2018 as GDPR privacy regulations were rolled out, rose by 4 million to 282 million, beating consensus by 4 million. If you scroll down here, you're going to be seeing the chart for the daily active users. As you can see on here, if you're looking at the quarter over quarter, if you're looking at Q4 from 2017, we were at 1,401, that is measured in millions, and then up till now we are at 1,523, and that is also measured in millions. So just taking a look at the chart, it's very simple and easy to see how these daily active users for Facebook are increasing. That is something that is very important when keeping in mind kind of the overall trend with Facebook. It's not a declining platform where there's been a lot of speculation that Facebook was a declining platform. It wasn't popular anymore. And this is simply just talking about Facebook and what's going on. The number two interesting thing about about Facebook and its earnings report today is that ad prices fell slightly, but ad impressions jumped. As you can see here, after having seen growth slow to 7% in Q3 from 17% in Q2, Facebook's average ad price fell 2% annually in Q4. However, this was easily offset by a 34% increase in ad impressions. That is massive. Instagram is driving much of Facebook's impression growth, both via feed and Instagram stories ads. Ad price growth, meanwhile, is said to be pressured by an ongoing mix shift towards product, services, and geographies that monetize at lower rates. That remark was a reference to both the faster usage growth Facebook is seeing in emerging markets, whose users on average are less valuable to advertisers, which you can obviously see from the chart as well, that Facebook makes on regions obviously that are not in the United States, Europe. It just kind of goes down. I believe the United States is going to be the most profitable market. It's about $34 per active user. it drops down from the United States and Canada. Europe is quite substantially less. And then you go to some of these other markets such as Asia Pacific, and then you have some of these other parts as well of the world that just are not as profitable. The third interesting fact that we found from Facebook's earnings call today was COO Sheryl Sandberg mentioned that Facebook now has over 7 million advertisers, up from 6 million in late 2017. Notably, she added that over 2 million of those advertisers are using stories ads. If you follow or are on and using the platform, whether it be Facebook or Instagram, you will notice that the monetization is happening much more frequently now. I noticed scrolling through my feed and my Instagram, there are a lot more ads. There's a lot more sponsored ads in there, and that is creating and generating more revenue. As those revenue handles continue to be able to get pulled, Facebook is only going to continue to get more profitable because Facebook really has not monetized platforms such as Instagram. There's still a lot of monetization that can be happening on Facebook as well. And based on the daily active users and monthly active users, there's no reason that profitability for Facebook should go down. It should only continue to go up, up, up. And that's why we saw the price increase today. According to Mark Zuckerberg, he disclosed that Instagram Stories now has over 500 million daily active users, up from 400 million 6 months ago. That is a huge increase. He also reiterated that Facebook has over 400 million monthly active users for its watch video platform. But it's worth noting that this metric covers anyone who has used Watch for just a minute. Zuckerberg did add, though, that the daily Watch users spend over 20 minutes per day using the service. I don't personally use that service. I don't know really anyone that does. So that will be interesting to see if that feature starts to catch traction there on Instagram. One more thing Zuckerberg also said on here was he signaled new Instagram e-commerce shopping features are also due this year. When I think about it, says Zuckerberg, just from the consumer side, an increase in commerce on Instagram, Facebook, and WhatsApp, I think is one of the most exciting product opportunities that we have in all of these products, and a big business opportunity as well. He said, well, adding that product discovery is something that Facebook particularly wants to get right in Instagram. This is a feature that I think is going to really open up and kind of capitalize the profits and the revenues for Instagram, for Facebook in general, because this is a feature that literally not only pits Facebook now against Google in terms of ad revenue and also Amazon in terms of ad revenue, it pits Facebook head to head with Amazon in the e-commerce domain. This is going to be something that's going to be very big. It's going to be something that will roll out over the next few years. That is why I'm bullish on Facebook. One of the many reasons why I'm bullish on Facebook over the next few years is because it has so much opportunity as one of the #1 visited sites in the whole entire world to now make additional revenue, not just from ad revenue, not just from advertising, but from e-commerce, from selling things on their site, getting basically affiliate money by having a sales platform just like Amazon does. And that is going to be a very big source of revenue, I think, for Facebook in the future. Number 5, with Facebook, we are seeing that spending guidance remains unchanged. As we see on here, Facebook still expects its GAAP costs and expenses, which rose to 51% in 2018, to grow by 40% to 50% in 2019. Higher research and development spending, safety, security investments, and depreciation expenses related to capital spending will all play roles. Likewise, Facebook, whose CapEx more than doubled in 2018 to $13.9 billion, still expects to spend $18 billion to $20 billion on CapEx this year. And Warner reiterated that after 2019, Facebook expects its cost/growth to more closely track its revenue. This has been a problem. This is one of the big reasons that Facebook has been down so much over this past 6 months or so, is because of the cost to the scandals, to the privacy issues. Facebook has invested in almost doubling its staff over the course of this previous year. Their costs and their expenses have gone up tremendously. But with that, what it is doing is it is nipping a lot of those problems that Facebook had in the bud in 2018 and prepping it for a very smooth sailing future as they invest more in AI and being able to read through all of the messages and things like that that are on their feed to try to deter things like like shootings and things of that nature, trying to sift through a lot of the fake media and those things that are getting posted on Facebook. These payouts and this expenditure that they are incurring now is only going to ramp them up for more profit in the future. And the sixth but not really final thing in Facebook's earnings reports that has come out, we also see that stock buybacks will continue to happen. This is always a great and promising statistic for me as an investor. If the company believes that they are undervalued right now at their current price point and they want to buy more shares back, it will not only affect their EPS or earnings per share, it will actually make it better. But that also shows that they believe that the company is undervalued at this current price point and they would love to buy those shares back at this price point. So they're going to continue to buy those back. As you can see, that boosting EPS a little, Facebook spent $3.5 billion on buybacks in Q4 after having spent $4.3 billion in Q3 when its stock was generally higher. This disclosure comes from The disclosure comes after Facebook added $9 billion to its buyback authorization in December. It is wanting to buy. With Facebook having $41.1 billion in cash at the end of 2018 and no debt, how crazy is that? And with the company coming off of 2018 in which it produced $15.4 billion in free cash flow, in spite of heavy spending, it can buy back plenty of additional stocks if it wants. This, again, is something that is very crucial to me. I think this is going to be one of the easily top 10 most profitable companies on earth. Give it another 10 years, 5 years from now, I do not see Facebook being upended in the social media space. There is no platform, whether it be like YouTube or whether it be Snapchat, Twitter, none of those other platforms that I can think of are going to upend or uproot Facebook in terms of being the number one social media platform. And that's including Instagram and WhatsApp, right? But that company is just not going anywhere. And I like the fact that these things have happened. Now, I wouldn't be surprised to see Facebook pull back slightly. They are far overextended. If we were to pull up the charts here and take a look, they ran almost 16% from their lows at the beginning of the day to the highs of the day right there after hours. I wouldn't be surprised if we did see some sort of pullback. RSI is way oversold, but long term, I see some value in holding Facebook through the near future. But short term, you might be able to play it a little bit. And the next company we are going to be talking about is none other than Tesla. Now, Tesla is a very weird company today at its earnings. Normally, Tesla is a company that will move in plus or positive or negatively 10+% based on earnings. This is probably the first earnings report that I remember in recent time where Tesla has not really moved. It had quite a big spike. It spiked up to 318, I believe, lows right after the closing bell to about 293. So yeah, spikes at 318, lows of 293, and then it has really kind of leveled out. It leveled out all the way kind of at about $300 until the very end of the conference call when Elon Musk announced that their current COO will be stepping down and will actually be retiring and be, I believe, just a senior advisor for Tesla. He had come back in 2015, had been with the company for a while. The new CEO, and I'm forgetting his name off the top of my head, it has been with Tesla since 2010. He's been with Tesla for quite some time. He's been in charge of some of the finances and things of that nature. Young guy. It will be seen kind of what that does for Tesla. But we did see quite a massive sell-off on Tesla, going from about that $302 price range all the way down to $290 in a massive sell-off. And then now we are seeing kind of a consolidation right there at about $294. The things that I took from Tesla's earning call that I would say are pretty important. First thing that we're going to talk about is the fact that Tesla beat on earnings twice in a row now. Tesla beat on earnings in this previous quarter, Q3, and now in Q4 for 2018, it also beat earnings. I tend to think that this is going to be the year Tesla is completely profitable, that they are going to be profitable in Q1, 2, 3, and 4. I don't expect them to make an astronomical amount of money. I expect them to probably have a profit on the low end of probably somewhere right around $500 million. Again, this is not a massive amount considering that it has a market cap of over $60 billion. But don't get me wrong, Tesla was negative $750 million at the same time last year. That is quite a big difference and quite a big change for Tesla. I think that is kind of something that we should be celebrating as opposed to what the stock is kind of reflecting right now in terms of price. Net income for Tesla for this previous quarter in Q4 of 2018 was a total of $210 million. Just as I said previously, it was actually $750 million. It was a $750 million loss during the previous quarter, year over year. So again, massive beat on revenue for Tesla this quarter. One thing that does have a lot of people concerned for Tesla right now is the fact that they have bonds that are going to be outstanding coming up March 1st of 2019. If Tesla share prices are not at roughly $359, and I want to say 18 cents, let's just call it $360 a share, Tesla is going to have to make the largest loan payment they have ever had to make at $920 million. Now, a lot of people are concerned about that. The reason why I am not is because Tesla is full of cash currently. Tesla currently is sitting on $3.7 billion in cash. I do not think that it's going to be a problem, even if they did not do any more rounds of funding to pay off that debt that they have and still have plenty of cash. Do I think it would be smart for them to do another round of fundraising and raising more funds? I absolutely do. I think they do need to continue to invest in research and development. And I think paying off that massive amount of debt and just using all their cash that they currently have isn't a bad thing, but it's not a great thing. I think if they can secure the funds right now at a low interest rate, it's not bad to secure more funding. But again, Tesla is not going to be hurting and is not going to be in a dire strait if they do not actually raise more money and have to make this $920 million bond payment that they are going to have due here in about a month. More interesting stuff coming out about the Tesla Model 3 and the Shanghai factory. One of the neat things that Elon is predicting for 2019 is that we are going to be getting kind of towards the end of 2019 and into 2020, the ability for Tesla between their Fremont factory and their Gigafactory that they are producing or building right now in Shanghai, which should be open in Q4 of 2019. They are predicting that they are going to be able to produce in 2020 500,000 or 500,000 Tesla Model 3s during that time. That to me is mind-boggling. They are trying to get up and ramp up to that point where they are producing between 7,000 to 10,000 cars a day. It just is something like out of science fiction novels. I mean, it just blows me away that they are trying to ramp up that production and being able to produce that many cars. The Shanghai factory is looking like it is on schedule. The Chinese are really bullish and wanting to please Elon. They're wanting to make this factory quick as possible. And this is going to give Tesla just one more advantage in terms of being able to produce cars over in the Asia Pacific markets and also getting those cars to Europe as well a lot faster. I think producing and putting a factory over there is probably one of the smartest moves. And because legislation in China has changed as of recent, China does not require Tesla to have a domestic investor now. It's just everything kind of came together perfectly for Tesla to be one of the first American automakers to produce cars in mainland China and not have to have a financial backer that is Chinese based. It does create different risks and things like that in terms of they don't have another person to share the risk in terms of producing these cars, but it does still give them quite a bit of possibilities in terms of not having to share proprietary information, which could then be disseminated to other companies. And we all know China is very notorious for doing that. Micron's a really good example of that. Other car news coming out of Tesla is that the Model Y is still on for release in 2020. That is going to be kind of the crossover car. Probably put it up over here. Crossover car for Tesla. It's going to share 75% of all of the equipment and kind of same things that are in the Model 3. It's going to make production very, very simple and easy for Tesla. That is going to be perfect in terms of savings in cost. It's going to be great in terms of efficiency. And also crossovers are what is in. More people are wanting crossover SUVs right now. The Model Y is going to be doing really great. Elon also hinted during the call that the Tesla truck is also going to be released. Most likely here in the future, in terms of, he didn't actually give you he didn't give a specific date on when the truck will be released, but the official announcement is supposed to be coming this summer. So for all of you that saw my previous Tesla video, you probably know that I'd mentioned that official release is something that I am personally looking forward to and excited to be put on the reservation list. So that is it, everybody. That is what happened in the Tesla earnings call, the Facebook earnings call. In terms of my predictions for both stocks, like I said, I see a lot of long-term value in both. I see the potential right now for Tesla to sell off just because there was no positive news. Whenever there is not positive news for Tesla, it's negative news. I could see the shares selling off as of tomorrow, and then just getting some more consolidation. It's still not in its high range. I don't mind buying shares right now in the 290s. I'd love for it to continue to drop though, where I can add and build in my position. Again, I see long-term value in Facebook as well. Currently where it's at, I think that it should have a little bit of a pullback, potentially down to the 160 mark. If we can get it in that 160 mark, I think that's a great buy for a long-term investment in Facebook. So thank you so much for tuning into Young Money Investments. If you have any questions, leave them down in the comment section. Please hit that subscribe button. I would love for you to be a part of our community. If you're interested in my stock course, there's going to be a link in the description, and I actually will work one-on-one with you as well. If you have questions, things like that, we will do a Zoom video. So I'm throwing that in for the first few members that join my stock group. So talk to y'all soon. Bye.